Hi, if you're invested in Bitcoin, you definitely should know this chart over here. This is the long-term Bitcoin chart on a logarithmic scale. So what you see over here is more than 10 years of data, and the price scale you see here is logarithmic. So what you see here at the bottom of the chart are changes only in the dollar range, in the cents range, and once we go up the scale, the changes are in the hundreds, then in the thousands, then in the 10,000s. So this is when you plot this logarithmically. If you use a linear scale, this is what the chart looks like. So this is probably what you're used to with most charts. For example, when you look at short-term stock charts, you will see this kind of scale. Each step here is a constant dollar amount. Now, obviously, we can't analyze the price movements much in the early days with this kind of chart, so it's much more common to use this logarithmic chart. And people use this trend to try to predict where we currently are in the overall market cycle. So what you can do, for example, is to simply draw some lines like this. You can try to connect those tops with a curved line. You can try to connect as many prices as possible at the bottom, and then you end up with a trend channel. Now, when we zoom in here, this trend channel would imply that we could reach, in the positive scenario, a price of approximately 72,000. So that's a 50% gain roughly. Or if we get a sudden crash, which is very unlikely, right? We could see potentially a drop of 74% down to 12,000. So that's basically when this long-term trend line, it stays intact. Now there's many ways to look at this chart. One interesting fact, for example, is that this top over here that happened in February, March, April of this year looks quite different to the tops that we've seen before. First of all, the price stayed at these elevated levels for a much longer period of time, right? When we look at these tops, they just hit the high price and came down directly. Same here in 2013, same in 2011. But this recent top, we stayed at this high price for around 3 months. And there's more differences. Look at the trading volume. So this measures how quickly do coins move from person to person, or you could also think about it, how excited is the market, how much press coverage can you find, how much YouTube videos get watched, things like that. So the more trading volume you have, the more eyes there are on Bitcoin. And when you look at the prior tops, so in 2017, trading volume tended to go up while the price was increasing as well. And when we hit the top, trading volume was at its highest and then it fell. So basically there's a high correlation between trading volume and price. The more eyes there are on Bitcoin, the more inflated the price tends to be. And this is a constant. We can also see this here in 2013. Trading volume is high, price is high, and the same goes for the peak in 2011. Trading volume up to that point was the highest. So we have this kind of correlation here. And the interesting part is that this is not what happened here this year, right? The trading volume during this peak was relatively low. I mean, look at this. I'm now hovering over the top. And when you look at the same time here at this trading volume, it is comparatively low. That's very different to the top over here. And so that's why a lot of people did actually not anticipate Bitcoin to stop rallying at this point. If you have followed already a lot of influencers in February, March, April, you saw many people calling a 100K Bitcoin because we didn't get this blow off top. We didn't get this increased excitement. And so people were just looking for this. Where is the increased trading volume? And I think I can tell you where that trading volume went. Look at this. The crazy price increase coincided with volume increase, but then the volume in Bitcoin suddenly stopped since beginning of January. The only volume increase we then saw again was during this crash over here. But the peak of trading volume happened in January. But what's interesting is that trading didn't stop. It just shifted. So what happened is it shifted to the altcoins. Look at the Bitcoin dominance. So this is now how much of overall crypto as a percentage is in Bitcoin. So in the very early days, almost all of crypto was Bitcoin. Then we got the big ICO boom with all those ERC20 tokens being issued. They gained traction, and so Bitcoin as a percentage of overall crypto fell to around 35%. And that's also when the first bubble bust, right? So this was January 2018. And here, January 2018, that's when the bubble bust. And so Bitcoin dominance increased again. people went out of the risky altcoins into the comparatively safer Bitcoin. Bitcoin has lost in value, but the altcoins have lost even more, and so the dominance went up. Now, when we look at this recent drop in Bitcoin dominance, it started at the beginning of the year. So suddenly, Bitcoin went from being 70% of overall crypto down again to 40%. So within those 4 months, from beginning of January to middle of May, we got this incredible altcoin rally. And so when you now compare, for example, the Ethereum dominance, you can see it shot up, right? It went from 11% all the way up to now 20%. And so what happened is that people looked at this bull run, right? They saw there was this more than 10x increase in Bitcoin. And now we are at such elevated levels that getting from 40K to 400K is much harder than getting from 4K to 40K. So there's much more money needed to move the market. A lot of people that get into crypto, they get into the space in order to speculate, right? They don't just want to allocate a little bit of their money and diversify into crypto. They are in the game in order to make a multiple X on the investment. And Bitcoin didn't serve that purpose anymore. So especially retail, they shifted from Bitcoin to Ethereum and to altcoins. And so now the question is, what is actually going to perform in the future? I think it's probably a two-sided story. So institutions are still going to buy Bitcoin. The space is growing quickly. The returns, they are very lowly correlated. Here, so look at this. This is the correlation coefficient between the S&P 500 and Bitcoin. And we can see it increases over time, but in general, it's still very low. If you compare this, for example, with general stocks being correlated to the overall index, so say Apple to the S&P 500, we get a correlation coefficient of 0.4 to 0.6, recently even at 0.7. So your returns, they move in tandem very much to one another. It almost doesn't matter anymore if you buy an S&P 500 ETF or if you buy Apple. When stocks crash, they all crash at the same time. And so as an institutional investor, you want to add an appreciating asset that doesn't move the same way as your other portfolio, right? So if your stocks crash, you might still have Bitcoin that doesn't crash and vice versa. So if you combine both of those asset classes into one portfolio, you get less volatility overall. So that's why I still think institutions will continue to buy Bitcoin. But for the retail investors, a lot of the action has shifted now. I tend to believe that the growth in Bitcoin will be slow and steady. It doesn't necessarily have to mean that this upper band here has to be respected, right? We can easily break above this. But I do think Bitcoin now is rather a portfolio diversifying asset than something to make really a lot of money on. And that's the incredible advantage of retail. If retail is smart, we can invest into assets that haven't yet built up the strong reputation, right? We can go down this list of cryptocurrencies and look at what's promising, what makes sense to invest in. But institutional investors, they have to be more cautious. The game is much more skewed towards wealth preservation rather than maximizing return. And so I don't see a lot of pension funds getting into Dogecoin. I'm not saying that Dogecoin is a good investment for retail, but it's just an example, right? We can invest into more projects than most institutions can. And in the end, simply because the market caps, they are so much more smaller, right? Just look at, for example, coin number 10. It has 17 billion of market cap versus Bitcoin 856. So that's only 2% of Bitcoin. So we only go 10 levels down here. We don't even have to go to, coin number 100 in that list. We can still be relatively conservative, look at projects that do seem to hold a lot of promise and get into those kinds of coins. And that's probably the better approach if your target is to get the maximum return on your investment, to place strategic bets on projects that do make sense. Now, that being said, I personally am still very heavily invested into Bitcoin simply as a portfolio diversifier. So the way I buy into Bitcoin is via dollar cost averaging. I buy a bit every month, and that's simply to balance out my stock portfolio. But for growing wealth, I still think it does make sense to go beyond Bitcoin. And I do not believe that it is very likely that we will see again Bitcoin being 70% of overall crypto, unless some really heavy regulation happens. If the SEC, for example, now says everything except, say, Bitcoin and Ethereum is regarded as a security. Any kind of ICO that has a backing supporting team is basically an IPO in disguise and should be regulated. Then maybe we could see people fleeing back into Bitcoin again. But this kind of regulation is also very tough to exercise, right? Nobody can really control those decentralized exchanges. The only way to really regulate this is to make, for example, cash purchases for Tether illegal, allowing any involvement in cryptocurrencies only with proper KYC. Then you might be able to slow this down, but I don't really see this happening. It looks like this wave of innovation is here to stay. And so the altcoin speculation, it continues to grow over the long term, and it might even outgrow the adoption of Bitcoin. The price drivers nowadays of Ethereum and altcoins versus Bitcoin, in my opinion, are very different. Bitcoin is institutions, Bitcoin is dollar cost averaging in, and over the long term, volatility here declines and the price will somewhat stabilize. For Ethereum and altcoins, it's mainly people trying to find the next new project, trying to exploit inefficiencies in the market, and the main target is to grow wealth, to speculate in order to grow wealth. So the time horizons are also very different, right? You buy this over several years, but you might buy your altcoin only for several days, weeks, or months. So you might be aware of this. In case you're not, this is an interesting giveaway. Bitcoin never fell below the 4-year moving average. So this blue line over here is the moving average, the 4-year moving average, and we can see the price never really for an extended period of time fell below it. If you look within a week, you can find little wicks. So within a week, Bitcoin did fall briefly below it, but it never closed a week below the 4-year moving average. And I tend to believe that this will hold true for quite a while, simply because volatility tends to go down. And I do not see another drop of like 83% happening. Simply because the people that bought here in 2017, they bought Bitcoin similar to how people nowadays buy altcoins. It was a short-term speculative bet. We already went up from $200. And so once we went to 2,000 and then to 20,000, the people that got on the train over here, that bought here, their time horizon was likely not several years. They simply rode the wave and tried to exit once this move breaks. But my perception is that the people that buy since 2020, their time horizons are longer, especially for institutional investors. They are allocating to a portfolio. And so it doesn't look as dangerous anymore. We have been at these price levels for a long time. And so nobody is really scared of prices dropping that much. It's rather perceived as another buying opportunity. I don't think that even if Bitcoin was to fall to say 25,000, that there will be a panic and a similar kind of narrative that happened over here, right? People said that Bitcoin is basically dead. And when then this final capitulation here happened, nobody wanted to know about Bitcoin anymore. But I think nowadays, if Bitcoin was to drop that much, people would scoop up those coins. Nobody believes anymore that Bitcoin can go to zero. This was very different in 2018. People thought this whole story is over and we will go down to zero at some point. I don't think anybody reasonably believes this anymore. Bitcoin simply has too many very attractive properties. It can transfer wealth across borders quickly. It can protect your wealth against hostile government regulation. It can do all kinds of interesting things that are harder to do with, for example, gold. And so people have caught up to this story. And so I would not wait to buy Bitcoin until we hit this 4-year moving average. So let's just randomly extend this line, right? I wouldn't wait until we go down to say 20K to buy. It's really hard to time this market perfectly, right? And obviously the reward versus the potential risk doesn't look too positive right now. But these are still in the end just imaginary lines, right? The price is determined by how many people buy Bitcoin. Not so much though by the supply. I think that's one more thing that a lot of people get wrong. If you have been in the crypto space for a while, you probably know this model. This is the stock to flow model, and it tries to predict Bitcoin's price based on its issuance. So how much new supply hits the market, and that's algorithmically preset. We halve the new supply of Bitcoin every 4 years. And this model basically compares Bitcoin to other assets. So for example, gold and silver. Gold and silver have a certain inflation, or how much new supply hits the market every year. And based on that, they derive a market cap for the asset. And since Bitcoin's new supply goes lower every 4 years, the market cap is expected to increase in a similar fashion how other assets with a similar new supply are valued. And so what you can see in this chart is once we hit a halving, once the new supply gets cut in half for Bitcoin, we more or less 10x in price. That's the prediction. And when we zoom in over here, we can see that we are currently undervalued, quote unquote, right? We are at around 45K, but the model predicts we should already be at 100K. And a lot of people, they believe in this model and that we will basically hit 1 million in another 4 or 5 years. Now, I'm not saying that this is impossible, but I don't think it will happen because of the new supply. I think the supply side of the equation is relatively irrelevant for the price development of Bitcoin. Of course, it's a nice story, right? It's more rare than gold, and thus more money will flow into Bitcoin, will hold it for the long term. That's very true. But in the end, the price is mainly driven by the demand. We get these huge swings, and these are all demand-driven swings. The supply is constant. Everybody knows how much new Bitcoin will be issued. And so the stock-to-flow model, it obviously has to break at some point, because this halvening for Bitcoin, it will continue for, I think, until 2100. And we can't 10x every 4 years until then. Bitcoin would just be way too valuable, right? We would go into the tens of millions, hundreds of millions, 1 billion, just in a few years. And that's obviously not going to happen. So what's really driving the price now is how many institutions are willing to allocate to Bitcoin and how quickly are they going to do this. And so when you look at the Ethereum versus Bitcoin price, so this is now the Ethereum price divided by the Bitcoin price. I kind of see this as a measure of how involved is retail now versus institutional investors. Retail goes heavy on Ethereum, trades altcoins, tries to speculate their way up. Institutions, they allocate, and they mainly allocate to Bitcoin simply because it's more decentralized. There's no single lead developer that has all the power. And so they feel much more comfortable with Bitcoin. And my impression is that retail is probably going to win the race. The early adopters in the finance space have already allocated. Going further down the cryptocurrency rankings is much harder for them. And retail is adopting with all those centralized and decentralized exchanges. And retail can be really quick at adopting alternatives to Bitcoin. Otherwise, this kind of reduction in Bitcoin dominance would have never happened so quickly, right? This was only 5 months when we basically doubled the importance of altcoins and thus got down in Bitcoin dominance from over 70 to less than 40%. So let me tell you how I navigate this market. But before we do that, if you could hit the like button, that would be great. YouTube helps then spread the word. Thank you. So what I personally do is I DCA into Bitcoin every month basically as a savings plan. This is one of my savings account approaches. I buy into stocks every month. I buy into Bitcoin every month. I just buy it. I forget about it. And maybe I will touch it in like 10 or 15 years whenever I want to use this money for something else. So I think it's not that relevant actually where Bitcoin will go. Over the long term, I don't see a case where Bitcoin could hover around 10,000 or 5,000 5 years from now. I just don't see this happening. There's just too many people that buy it for the long term, and there's no real bubbles forming that could justify something like this. So Bitcoin is a completely long-term bet. There's no need to look at this price every day, every week. The same way it doesn't make sense to look at the S&P 500 that often. Of course, Bitcoin is more volatile, but that benefits you because when we are low on Bitcoin, you can basically just buy more for the same dollar amount. That's great, especially if you believe long-term it will go up. And that's definitely what I personally think. Not financial advice, of course, but that's simply how I see this. I think Bitcoin has a very bright future. Now, that being said, I don't think Bitcoin is anymore a vehicle to become rich. We might get a 5x from here, maybe in 5 years, something like this, who knows. But you're not going to get rich from it unless you deploy massive amounts of capital, take on massive amounts of debt. So Bitcoin as a savings plan, I think makes a lot of sense. Just simply buy and hold it. I also don't subscribe anymore to the idea that Bitcoin leads the overall crypto market. That if Bitcoin was to fall 10, 20, 30%, that Ethereum and the altcoins will move completely the same way. And that's because the correlations, they are different. Here, look at this correlation chart. We've got Bitcoin and Ethereum, and we've got various altcoins over here, just randomly selected. And what we can see is from the correlation coefficients that Ethereum tends to correlate higher with the altcoin than Bitcoin does. So look at this. Ethereum is 0.77 correlated with Cardano, Bitcoin only 0.68. For Chiliz, it's the same correlation coefficient. For CRV again, Ethereum has a higher correlation than Bitcoin, and so it goes on. So in the end, Ethereum is much more correlated with altcoins than Bitcoin is. So Ethereum is the real gauge for altcoin performance, for figuring out are we going up or down in altcoins. Ethereum leads the retail market. It's not Bitcoin anymore. Bitcoin and Ethereum, from my perspective, now have different investors, different time horizons, different price drivers. And so I think it does make sense to have Ethereum and potentially to even own more Ethereum than Bitcoin if your target is growing wealth and not so much just diversifying and preserving wealth. If your target is to grow, Ethereum is a pretty safe bet. I mean, it's crypto, right? Safe is relative. But I think there's a huge ecosystem for Ethereum, and most of altcoin speculation is fueled by Ethereum. So Ethereum isn't going to go anywhere. It's going to stay and it's going to grow with retail demand. Now, what about all these other altcoins, right? We can just go down the list. Should you go into Cardano, XRP, Polkadot, Solana, whatever it is? Are these good investments? And the answer obviously is it depends. And this is another story all by itself. But what I've noticed is when looking at all of those charts is that a lot of them, especially the lower we go this ranking, a lot of them are really driven by attention on a token, by hypes, by cycles. So I don't think you should buy a diversified portfolio of all of those coins or of many of those coins, because a lot of those coins, they will also grow out of favor. Look at the top coins in 2018, the first bull run. They look pretty different to what you see over here. There's no Bitcoin diamond here at the top. Dogecoin used to be way smaller. There was no Polkadot. So the top coins, they do change. And so the way I approach those smaller coins is basically you have to analyze them regularly. You have to figure out what's currently cheap, what's not yet hyped, or if something is hyped, are you early enough to still jump on and exit very quickly? Trading strategies like this. But this here is active trading, in my opinion. This here is not material for a diversified portfolio that should be held over 5 years. I think you're probably going to underperform with such a strategy. You have to be very active at trading the right things at the right time, figuring out market inefficiencies, and do the exact opposite that you do with Bitcoin and Ethereum. You can't just buy and forget. And so that's why this here is more or less earned income. You invest a lot of time, you build up your skill, you try to grow your money. This is almost like a job, but luckily one that compensates exponentially with time if you're quick enough, because your capital grows. And so if you figure out a way that makes you profitable trades over time, this is a very valid way to make money. But this is different to investing, right? This is not the passive approach. You deploy capital, you grow it, and you use it later in time. This is active speculation, and nothing against speculation, but it's just something completely different. It's trading time for return. It's not trading risk or capital for return. And so if you want to know what I think about all of those coins in a specific market environment, feel free to subscribe and hit the notification, because then you are notified quickly and don't get outdated videos. And of course, feel free to join our Telegram channel as well. We are currently around 150 people. If you've got a specific altcoin that you would like to get analyzed, you can also comment this down below. I'll make videos on the altcoins with most comments. Thank you for your thumbs up and see you in the next video. Bye bye.